Yeah, Bitcoin is currently pushing higher. Bitcoin is breaking out of the corrective price channel to the upside, and this is still in line with the idea of a larger wave too. We will take a look at the microstructures because at the moment, the risk of another low in the support area before we get that C wave rally, the risk for that is still there, but it is clearly reducing. So what I want to show you on the smaller time frame is how the market could also break out directly to the upside and reach potentially a target area here between 69 and 72k. Why that area? First of all, price already got rejected here in July, around the 21st of July, from the resistance area. The broader resistance zone is between 66,233 and 76,638. And that is the zone we discussed already many weeks ago. It has not changed. This zone rejected the price, but we only reached the very first level, which means for me that the minimum requirements for this rally from the July low, they have been fulfilled. Absolutely. I mean, the market moved higher, reached resistance, got rejected, job done. But then we also have to pay attention to the structure of the decline. And this is the first time in this bull market, no, not yet, of this bear market, that the decline looked more corrective than the rally. What does it mean? It means that potentially the market wants to go higher and form a larger three-wave move. For those of you who have difficulties to maybe visualize this, just look at, and I zoom out a little bit and hold on. Let me navigate to the right location here. Just look at how the structure appears. From those significant swing highs in October, it was a fairly direct decline. Then, after the January high, a fairly direct decline. After the May high, a fairly direct decline. Quite steep as well. This decline from the July high was not very direct. There was a lot of up and down, a lot of back and forth, and the angle was also less steep. So that means that the pullback that we saw from the July high might have just been part of a larger three-wave move to the upside. And that's still the main assumption, right? I posted that over the last few days again and again, and highlight regularly here on YouTube and on X and in our membership area that another move into that target area up there is likely. Also, look, we got rejected from the first fib level, so if the price pushes higher, the next fib level will likely be reached around 69k, then we've got 72k. In addition to that, if we really say that the market formed an A wave to the upside, which is the first wave of the wave 2, and maybe already formed a low in the B wave, then the 100% extension is very common. It's very common that the 100% extension is reached because an A wave and a C wave, they tend to have the same length. And that one is located at $70,570. So I think it is clear that the potential is still there for the market to move higher. I mentioned already over the last few days that it is the upper boundary of the channel, which is the very first resistance. Now that's broken. That still doesn't rule out that the market comes back into support once more. Support is between 59,317 and 62,436. But for now, there is a lack of bearish follow-through, which means probabilities have increased that the C wave up has started. Now, there are a few levels here that we pay attention to. Specifically, the EMA, the 21-week exponential moving average. It's currently coming in around 69,900. Then the yellow trend line, and also the 200-day moving average is also located in this area. Now, I would say, to get some further clarity, that the daily chart can't really tell us anything else at this stage. I would say we'll now take a look at the microstructures. Maybe there's one more thing that we can take a look at here on the daily chart, quite relevant though, and it would be the relative strength index. Unfortunately, I think the RSI I just need to reactivate it. So it's the relative strength index, RSI. And I mentioned many times here that we have this yellow trend line also on the RSI. It might be relevant. When that yellow trend line is reached again, I would at least watch for a potential rejection. It's just a trend line that's been with us basically this entire bear market. And so it is currently located around 62, 63 RSI. So watch this level. Yeah, watch this level. It's very, very important. And so I think for now, this should be important as next resistance as well. And now let's take a look at the shorter time frame. So, and this is now the smaller time frame. You see how the market reacted to our larger support area here several times this week and also during the weekend. Now the market moved from the support area towards the upper boundary line of our corrective price channel. And it's done that in 3 waves, which means it's corrective, which means that at this stage, from a structural point of view, the risk is still there that we get another low, but the size of the advance exceeds what would be normal for a wave 4. It is still valid, but the wave 4 scenario will be invalidated. I mean, the white count, which allows for that one more low, it will be invalidated with a break above 65,760. Here it's important to distinguish between the broader structure and the microstructure. The broader structure tends to suggest that we should see that rally higher. The microstructure within this larger structure suggests that we might see another low, but whenever we break above resistance, of course, this becomes less likely, less of a risk. And remember what I said yesterday, for even an indication that we have a top, the market needs to break below $63,270. We have not seen that decline, which means there was at this stage no confirmation at all that the bears are taking the lead here in the short term. What I would pay attention to though now, because the price is broken above the 61.8 retracement, which is the first resistance, at 64,346, how the market reacts to the next one. But that's already the 78.6 retracement, and it's a little bit high for a 4th wave. But how we react to it will be important. And then the pullback afterwards will be important, because if the price pushes higher, we get a pullback and form a higher low and a higher high, then we have 5 waves up. And if the market gives us 5 waves up, the white count will become way less likely. The bulls are taking the lead, and then the market will likely give us a bullish setup. I mean with that a so-called 1-2 setup, which means 5 waves into the trend direction, 3 waves down, and that would be a bullish setup. We can then define another support area as we did here as well. These boxes are relevant because they should usually lead to a reaction. It worked this time as well. Again, maybe we get the advantage of another low, maybe, maybe not. The market at the moment doesn't give me any indication that a pullback has started. Yeah, not even a wave 4 in the orange scenario. So for now, I think it is important to be aware that the probabilities for a direct breakout higher, they have increased. With breakout, I'm not suggesting end of the bull market. That would require much more evidence. But the expected rally into the resistance area, that would be ideal still, right? But bear in mind that normally August, at least historically, even in bear markets, is a bearish month. July is normally bullish. That worked out well. In August, it might just mean that, well, I mean, seasonality, take it only as context tool, right? It's not there to predict, in which week a top should form or so. But just be aware that in a bear market, normally August it's bearish. So we might see maybe a few more weeks of rally, maybe a couple of weeks, and then the last 2 weeks in August bearish. I don't know. Just keep that in mind. And support and resistance are very well defined. And to be honest, the market hasn't really moved much in the last few days. But if we get 5 waves up, it is the best evidence we can get that we're on our way to 69, probably rather even 72K. So that's the update on Bitcoin. I hope it was helpful. If you're interested in additional updates, then feel free to check out our membership. Also, I suggest that you guys follow us on X for additional updates, charts, news, and much more. You learn a lot more about Bitcoin here, and additional updates can be found here as well. There's also some information about our terminal that we're running. Plus, you can find a lot of additional updates on different altcoins, but also stocks and many other asset classes, also videos that we do not normally publish on YouTube. Thanks so much. Have a great day. Bye-bye. If you are enjoying these analyses and would like to take things a step further, our YouTube membership might be for you. It includes hundreds of exclusive member-only videos, additional posts, priority replies to comments, and the chance to help shape future content by suggesting charts and topics you'd like us to cover. For those who want to go even deeper, our Gold membership also unlocks access to the Discord analysis feed, the MCO terminal, and the Academy. If that sounds like something you'd enjoy, just click the join button below the video. We'd be happy to welcome you as a member.